All right. Good morning, everybody. Made it. It looks like Japan is starting to unload a little bit. By Monday, we may start to see that actually play out in the market. Small caps basically flat with China, Dow, Nasdaq, S&P all barely up, just holding the line after yesterday, which, all things considered, the idea that we would just hold the line and go into the weekend, it's still an idea that is playing out for the moment. We've got a couple of Fed speakers today. And that's going to wrap us up. There it is. This one, Mirren and Daly. Dally. However you say that. I'm really good at butchering people's names. And then we had Kashkari earlier chipping his teeth. Market didn't really seem to care. So just keep your eye on the US dollar Japan pair. That is likely going to be your earliest tell. And if you don't use that one, you could keep track of the JGB 10-year. I don't think you can do that on Thinkorswim, but you can certainly do it on TradingView. The put wall rolled up just slightly. It wasn't a big roll. And as I've talked about before, one day doesn't matter. We need to see it roll up and then stay there. They were talking about how yesterday all four of the indexes closed at highs, and that's only happened a few times in the last century. We keep talking about how this is unprecedented times, and we are seeing things that are, rare, and it continues to happen. But I guess we'll just take what we get. We did set that higher high though. So at the moment, now that we've pulled back, we got to focus on the question, are we going to come down and check this low? Or are we going to hold the line here and maybe get another higher high? We don't know for sure, but that's what we want to be focused on, which means everything leads back to yesterday's price. We're still above the 91 cog line, 66.91, 66.92, if you want to round it a little bit. And then if we continue to fade, yesterday's low is basically the midpoint for this whole run. That way you don't have to mark it twice. It's already there. It's basically that low. So if we break the 3, we aim for yesterday's low. If we break that, we aim for the 10, which is 66.50, that options level. Then the round number 6,600, which is the 20 period, and it'll just line us up level by level. This low is the cog line, 6611 cog. Couldn't make that up if you wanted to, right? So we could see that white line here. That's the 3 period that I just mentioned, or the 4 period. And there's a good example of what we're talking about. If you break the 4, aim for the 10. So 66.91. And then 66.81. Basically, it's this low here, our own Globex low. Then 64.50. There's a 32 cog line down here. And then 11, and then the round number 60. Nice and easy. We're not expecting that, by the way, right? I know pointing to the downside is easy, but just like I said yesterday, don't think that we have to go down, right? It's what we talked about in the pre-market. We didn't have to have a big sell-off, and we didn't get a big sell-off yesterday. Well, it's the same thing today. My base case argument is that we're just going to try to keep the gains that we made on the week. And at that point, with that point in mind, we just expect to stay in this range. That's yesterday's price. Maybe we wick out and come back in again, but we're not really expecting to go anywhere. There's no reason to really sell off, and there's no reason to really break out and run. So if we get to the edges, I'm going to play the reversal. We're looking at 58,000 for the overnight volume. Compared to yesterday, it's a little light, but looking at what we've been getting lately, that's right where it should be. Not too heavy, not too light. A little bit of Goldilocks, right? It's just right. Good enough. So no warning in that volume. We have to ignore the market maker move. It's because of the OpEx week. There's just nothing we can do about it. We're within the ADR lines, and the base case argument is that we will stay within the ADR lines. There's yesterday's trading range. If we break yesterday's high, we could get to that upper ADR line, but not expecting to get beyond it. Now, look, news could come in and break us out and, really get us running, or break us down and really get us to fall. But it would take a news, right? It would take some headline, some shock and all that we didn't see coming, an unknown to get that to happen. Otherwise, looking at the economic calendar and the things that are moving around this morning, we don't have any expectation that price is going to break out or break down. We're just looking to go into the close nice and quiet. Today's pivot is higher than yesterday's. That's bullish. Price opened above it. That's also bullish. It's a narrower channel than yesterday, but it's still a wide channel compared to what it could be. Wide channels imply that if we try to break out, that the breakout fails. We have to consider how far away we are from the weekly pivot. And the line in the sand was given yesterday. So that's what, 2.4, just around it a little bit. When I was doing my back testing and measuring, we were able to get into 3.25. So, less than 2.5 doesn't seem like we are too far away from the weekly pivot. But as I said to it, it's not a clean measure like using the 10, simply because the 10 is a consistent measure of previous price, and these floor pivots are a math formula of previous price. It changes the outcome drastically. At this point, though, I would say that's our distance for the week. That if we attempt to get any farther away than this, that it'll be an uphill climb and we'll be stacking weight on that runner as they go. That it's just going to be exponentially more difficult to go higher from here. And considering it's the last day of the week and that the week is half done, or the day is half done, we just go quietly into the close. Yeah, I know. I get it. Newer traders don't grasp the logic that the day is half done because you just got out of bed. But the market opened last night at 6 o'clock and it is past 6 o'clock this morning. The day is half done. The S&R levels for today should line up relatively well with the ADRs. So it shouldn't be any surprise there. Yeah, pretty close. The S is a little lower than the ADR, but the R lines up almost spot on. So if we do try to break out, we've got the ADR here and we've got the R line. We got the ADR down here and the S line. So we can do it. It's just going to take some really big headlines. We can see if we continue to fade today that we've got 66, 68 down here. It's this big point of control. It's a lot of structure here. That's also likely to help stop us from selling off too much if we do test yesterday's lows. And if we break that, we've got another level down here, 6650 area. So we've got a lot of structure underneath us. All those moving averages, all these points of control on the week. And we could cut through all that, right? It's not like this can't be broken. But again, it would take something really negative in the news. $10-day, 30-minute volume profile in TPO. It's at 6670. It moved from this lower level up just a little bit. We're still not going to get into the candles that made this for at least 2 weeks. So unless this area starts to build out right around that 67 zone, then we're not expecting to see this point of control move anytime soon. But keep your eye on that 67 though. If we continue to sit here and build it out, then we could see that point of control move up. Otherwise, a fade to the downside has structure at 6670. Below that, 6650. Then we have a shallow area. So if we break 6650, we can go to 6600 real fast. And I've argued for a while now that if we go from 6650, we're going to go to 6550 relatively quick, right? That's the next zone that's built out. Shallow through here. We're running 50s, not hundreds. We did not get a new VPOC from yesterday, so we have one from the 17th, but not one from the 18th. All things considered, yesterday is a decent distribution. And we can see that selling that came in across that high. But we can't see that buying across the low down here, right? Sellers got exhausted It wasn't because buyers stepped in with gusto. Big difference. The distribution in the overnight, we're already setting up these three zones. It's pretty ugly, all things considered. Still, the morning is early, and we are putting in a bit of a distribution. I would think at this point that it would be a mistake to consider three different distributions here. At this, just gotta let it play out a little bit. What's more likely is that we stay in this range, and as we build this out, we rise up like this, and we put some work in and kind of fill in these shallow areas so that eventually it does form a normative distribution. We got a preview of next week's range. The thing with this indicator, most of the time it does a decent job, but it's never as good as doing things by hand. And if you ever find it out of whack, don't trust it. Right? We've got examples in the past where we get one of these really narrow. See if we can find one. Yeah, here's one. Something like this. See how crazy narrow that is? Obviously, it was broken. And that was right after a contract change. Well, here we are again, right after a contract change. And we've got this really big weekly expected range. Maybe it's accurate, maybe not. We can get an early glimpse of next week's range, and we can see that it's around $100 right now. Now, it's not set in stone yet. We have to wait for the market to close tonight. After 4:15, when all these numbers stop moving, we can see, what the number is here, and then we can go in and mark it on the chart. But that's 100 points plus or minus, which means that's a 200-point range. So if we go in and we look at that, we should not see a range bigger than 100 points. From 67, it should be up to 68, basically. And then from 67, it should be down to 66. And that's about what we got right there. 100-point range. Now we've had those weeks where it's narrow, and we look at that narrow weekly projection as an indication that there's a lack of volatility or volatility suppression because of a big event. FOMC, CPI, NVIDIA's earnings, all of these things that's been giving us these narrow weeks because markets didn't want to jump in front of those big events. So we've had a lot of narrow weeks. Now we got this big monster week. The range is derived by two pieces of information: time and volatility. Well, this week was a 5-day week. Next week is a 5-day week. So time is the same. The only difference between the week that we just had and next week's is the amount of volatility that's being priced into it. This week that we just had, the range was around 84 points or 1.25%. Next week's range is projected to be 2.7, 2.8%, 185 points wide. The market is pricing in a lot of volatility for next week, and it's not connected to an economic event. If it was, we would expect it to be sideways like a volatility suppressing situation like FOMC and blah, blah, blah. The market's just straight up pricing in a lot of volatility. Now, I know if you don't trade options and you mention volatility, people just tune you out. But we can simplify all of this language and just make it simple and easy. Implied is another word for promised. And volatility is another word for movement. So if you have high implied volatility, you've got big promises for movement. It doesn't mean we're going to get the move, but the market is pricing in the potential for big moves next week. There's a distinction between that, right? Nobody's saying we're going to get those big moves, but the market is pricing in the potential for big moves. We're going to measure this again on Monday. Right now, it's just a projection, but it doesn't count until we get into the close and those numbers stop moving. So this is just an early glimpse. On Monday, we'll come back in and we'll see what we actually did get. But the market is really concerned about next week and the potential for moves. And they should be, right? We've got one of the biggest OpEx that's ever happened in the history of the marketplace happening today. The amount of options structure that's been in place on both sides of the market, up and down, has been like bumper cars when you go to the bowling alley, right? The little bumpers that stop your ball from falling in the gutter. Well, there's been bumpers holding the market back. And sure, we've broke those bumpers both to the downside and to the upside, but they just stepped in and kept bidding it back up anyways, right? Even when we did break them to the downside. And on the upside, they just kept rolling those bumpers higher and higher out of the way, adding to the range, by the way, adding to the amount of notional value surrounding price. So the market's been pretty complacent and comfortable with the idea that we couldn't get a significant sell-off. Heck, anytime it went down, they were buying it right back up again. You couldn't get the market to go down, even if you wanted it to. All of that's going to be gone. When we come in Monday, there won't be structure protecting the downside and holding us back against the upside. And that range reflects that. So we'll see what we get on Monday when we come in, but the guardrails are off. We're still more than 3.5% above the 10-week, but we're less than 4. It's kind of a nice line in the sand. When we get above 4, really start to have to be worried about turning around and coming back the other direction with velocity. But we're not above 4, so we're not looking for any sort of downward quick move. If we continue to push to the upside today, if we try another breakout, keep your eye on how far away from the 10-week we get and if we can get above 4% or not. Looking at the 10-day, even with the moves that we've had this week, you can see that we're not even 1% away from the 10-day. We're not overbought. We're not overextended. We have not moved too far too fast. And this does not owe us a mean reversion back in the other direction. We could easily go another 0.5% to 0.75% higher today, and we still wouldn't be overbought or overextended or too far too fast and overstretched. Plenty of room. All right, so we got the Mag 7 up volume is up, the dollar, and that's it. Not even the dollar, not up enough. So we got the Mag 7 up volume. That's it. Looking at what's down this morning, VIX, Bitcoin, more Bitcoin, a little bit of China, nat gas, and who cares? That's it. So most of the market isn't up or down a 0.5%. It's just sitting in that quiet little neutral spot doing nothing. Like we've talked about a lot, it's always a simple thing. Focus on getting out of the box. And this is the box that we have to get out of. This is our own Globex range. We have to get out of this range to do anything else. And what that something else would be is challenging yesterday's low and yesterday's high. Then we have to get out of that, right? So GTFO, get out of the box. At this point, with nothing up more than 0.5%, it'll be an easy tell if we start to get flows that come in. If they're really negative, we'll see it because we don't have anything that's really negative. If it's really positive, we'll see it because we don't have anything that's really positive. So that should be a real easy tell. The tricky part about today is the options flow. We're going to get a lot of options flow because it's OpEx and they're rolling their positions out. That's going to mask any 0-day activity that is bullish or bearish that might come in and start to smack the market, because we're going to see a lot of 0-day trading as they roll out of their contracts. So that's going to be the tricky part. Keep your eye on the JGB 10-year and or use US dollar JPY as your proxy tell. I think if you try watching the VIX, it's going to get muddy water, right? Because the VIX is going to be focused on 30-day SPX options. That has a handicap to it. I might post at some point through the later part of the morning. I don't want to do it too early. Some SPX butterflies to the downside, just really cheap stuff, right? That's they're not high probability, high conviction trades. They're low risk, high reward landmines that if we do sell off, price can land on them. We'll shop around and see if there's any good ones down there. Everybody, be careful, be safe, have a good weekend, get out of this box. Otherwise, this is our range today.